Hey everyone, welcome to Your Market Insight. Marcelo's in here. There are some really interesting things going on in the market overall, especially as it relates to gold and even things like Bitcoin, the yield on the 10-year treasuries, as well as some things like inflation expectations, which are really starting to change. Now, one of the examples that I really like utilizing for people is this notion of the law of economics. To me, is very similar like the law of gravity. So you can do some pretty crazy things. You could put a ball inside of a cannon and shoot up as high as you can, but eventually that ball is going to have to come down. Now, until that ball has come down, you can say, well, look, nothing's really happened, everything's fine. But at some point, that bowling ball is going to come down, and you got to be very careful for where that thing's going to land. Economics is exactly the same way. So for a very long time, we've had declining interest rates. Inflation expectations have remained incredibly low, almost zero. And at the same time, the U.S. government has been printing unprecedented amounts of money. And there are definite expectations that another stimulus is going to come through. And if that does come through, then we're going to see even more money being thrown into the market, which could create even more distortions in the short term in lots of different ways. One of the primary ways that we can see that distortion is with inflation. Eventually, if you keep printing money, you are going to get a lot of inflation. We don't know exactly when that's going to happen, but certainly the fact that inflation expectations are now starting to creep up means that we are definitely closer to that point than not. And the implications for what happens when inflation expectations start to come in and yields start to rise can have some really, really strong effects. Can have some really strong effects on all kinds of different things for the market, such as not just yields on the 10-year across all bonds, but it also can impact the stock market. It will impact the dollar. It will impact things like gold, and even some really risk assets, things like Bitcoin, and a lot of these stocks that are earning no income and being bid up like crazy with no underlying business is certainly going to be affected as well. So we really think that people should take note of what is going on. Be prepared, make sure their portfolios are hedged in the right way, make sure that they're looking at the right types of investment opportunities, making sure that they avoid certain things that could get really dicey really quickly. And if you're not really sure exactly how to go about that, and it is an incredibly dynamic environment, you should definitely talk to somebody. Now, for the past almost 12 years, outside of a few short moments, a few months here and there where we've had some volatility, it's been pretty much smooth sailing. But historically, that is completely outside the norm, and we could see, just like we have in history, some periods of really high volatility, high stress. And we think that there's a definite chance that does occur at some point, and we think it's more likely to happen in the near future than not. So, just to summarize, the dynamic right now is incredibly interesting. We think people should be really cautious. There are some incredible opportunities, but there are a lot of landmines that people need to be very aware of. And these things can literally just flip a switch from one day to the next, and we don't want anybody to get caught by surprise. So if you have any thoughts or questions, we'd love to hear from you.